Hello and welcome. We've all been hearing about the red hot Chinese real estate market, and that of course includes Hong Kong. We've also been hearing about some interesting steps that the Chinese government has been taking to cool off real estate and real estate deals. Joining us now is a very interesting guest, Ronnie C.Chan, chairman of Hang Lung Properties, one of the largest real estate conglomerates in both mainland China and Hong Kong. But we're also talking to him in the context of GrowthNet, which is the opportunities likely in these 30 countries, which are really in Latin America, Africa, to some extent in ASEAN as well. So, Mr. Chan, thank you very much for joining us. So, what does a real estate mogul sitting out of Hong Kong see in these kind of markets, and what are the opportunities, and what brings you, or rather, what makes you look at them, or how do you look at them?
Well, certainly there are plenty of opportunities in all these growth markets. I always believe that it's a lot easier to swim along with the flow rather than against it. So in these constellation of growth economies, if they're growing at 6, 8, 9, 10%, it's a lot easier to make money there than in, say, the West, which is growing at 1% maybe. A dummy like me, in an 8% growth economy, perhaps I can make some money. You have to be really smart to be in the 1% or zero growth economy. So, but on the other hand, being in real estate, you really can't be in every market. So I have many friends in India, in Southeast Asia, which will be very, very wealthy because they are tapping into this constellation of growth economies.
Right. So, how's the real estate market been in the last 1 year? I mean, we've been hearing a lot about the Chinese government making it more and more difficult to do transactions, property tax, interest rates, and all of that. What has this meant?
Well, the mainland Chinese real estate market is an extraordinarily complicated one. And frankly, I'm not sure if anybody got a solution. The government is doing their best. They're trying different things. I think so far they are reading the market correctly. Not just the market today, they also have to read the market dynamics such that what it may happen tomorrow. And so they are struggling to get it right. And frankly, that's why I don't want to be in residential real estate. Residential real estate touches on people's livelihood. But if you're in the commercial real estate, like where I concentrate, then it is a lot less government involvement. They don't care how much you charge a business enterprise. But residential prices is sensitive.
Right. So, and you've been investing almost $8.5 billion in just building malls in China, right? What is this? I mean, the real estate development is inextricably linked to economic growth in itself, right? So, how do you see this going forward? I mean, do you see growth overall as well as for real estate continuing in that part of the world?
Well, in fact, I did another project recently, so I'm really investing now about 10 billion US dollars. China's growth is still at beginning stage, frankly. It is more like a 15-year-old rather than a 50-year-old. So if you were to look at what has happened to Japan, what has happened to Korea, what has happened to Hong Kong, Singapore, then China has a long way to go, and it's just a much bigger place with a lot bigger population. And so I think that, if as long as the society remains relatively peaceful, the market will be there for the next 20 years, 30 years.
Mm-hmm. And what are the trends that you see in economies like Hong Kong? Are they also going to grow as fast?
Hong Kong is rather mature, and hence economic growth will slow down. Thank God that we have mainland China next to us, and so that's why I believe that Hong Kong economically cannot die. When you have 1.4 billion people north of the border, growing at 7, 8, 9%, and Hong Kong having our unique advantage, we will continue to thrive, if nothing else, because of the mainland of China. So I say that we will thrive in spite of us, not necessarily because of us. But nonetheless, it is still a mature economy. A lot of people are fighting for limited opportunity. Why should I play there? Might as well go to mainland China. It's tough to do business in mainland China, but we've been there now for 20 years. You have to learn, you have to pay the tuition, so to speak, by learning, and we did. And so I'm not negative about Hong Kong, but I believe in what JP Morgan says, and that is when there's blood on the street, that's the time to buy. The converse of that is that if there's no blood on the street, perhaps you shouldn't buy. So I don't see blood in Hong Kong, so no opportunity to buy.
I heard you being quoted saying that you don't understand mainland China at all.
Well, yes, I did say that the Hong Kong real estate market, I think I can understand it. And if I can have my ways, I know how to fix it. But the mainland market is so complicated. It has, as everywhere else, people's need to live with a roof over their head. It's an investment opportunity. It's a speculative possibility. There's not a whole lot of other alternative for the local people to invest. Interest rate is very low. The stock market is like a gambling casino. So real estate become a hot asset class for mainland people. And so it is just complicated.
So what are the lessons from that? I mean, India too has seen a lot of money go into real estate and of course gold, and to that extent it's similar to China because it's really money seeking safe haven. Are there any lessons at a policy level for those in real estate construction?
I think to start with, the government need to find more means for people to invest their money. Interest rate sometimes is not up to you. You are subjected to the global environment. So putting money in a bank, the government may not be able to control too much how much interest you're going to be able to get. So, the stock market must be regularized. Professional, institutional investor must be built so that it become a legitimate channel of investment for the huge amount of money that is being created, huge amount of wealth. Just consider the export of the last 20 years. That money goes somewhere. I know that some people are very cynical. They say, corruption, whatever it is, a good amount of that end up in Joe Blow's pocket, the average man's pocket. And so there must be alternatives for people to invest in. But of course, even then, China is just the simple need for housing. The Chinese people, unlike perhaps the Western people, they like to own their own place. In the West, if you
like
rent,
Indians.
you're okay, like Indian, right?
Yeah.
The Indian and Chinese are very similar in many respects. So, you have to satisfy that.
Right. And are you looking at any specific projects in India?
I have some friends who have a lot of land, for example, in Mumbai. So I tell my friend, I say, just remember my son, because your son will be even wealthier than you. The father is already very wealthy, but your son, when the rent control is being lifted now, when he developed those things, your son may be even more wealthy than you. And so just remember my son. So when your son makes a lot of money, make sure that he buys my son dinner. That's all.
So, so you're saying essentially that, hold on, I mean, this is too...
For him, not for me.
Not for you.
There's some money it's not meant to be. It's meant to be for my friends in Mumbai. It's not meant to be for me. So just stay with friends with them. That's good enough.
Mr. Chan, thank you very much for speaking with us. Thank you.